For those of you who don't know me, I'm Tony Langham, co-founder of Lansons, and we have a fantastic panel here today. And I'll just check Eila can hear us. Eila, can you hear us?
I can hear you and hope you can hear me as well.
Fantastic. We can all hear you. I will briefly introduce the panel in the order in which they're going to speak. We're going to start with Stephan, who's going to talk about, who's a global head of capital markets at The Digital Economist, the consultancy, Stephan Pouyat. Then Eila's going to speak next, Eila Kreivi, and she's Director and Chief Sustainable Financial Advisor at EIB. Then we're going to go to Morten Nilsson, who is the CEO of Brightwell and represents the investors on the panel. And we're going to finish with a question to Paul Horrocks, who's lead private investment at the OECD. So I'll give each of the panel a question. I would love this to become interactive, so I'm quite happy when I've given each of the panel a question, maybe to have a couple of follow-ups from me, but I'm happy to throw it onto the floor if people are interested, or run it from the stage. So get your questions ready, I guess. And I think I don't have anything on my Slido at present either, so but that's fine because we can give you a microphone. So with that, I'm going to start with Stephan. And Stephan, you get the whole field to yourself. So the big picture of sustainable investing, if we say it's a cause, I mean, how is the cause doing at the moment? Where is sustainable investing?
Well, I wish I had an enthusiastic and optimistic answer to this. But let me share some context, and I said it in New York. I'm very optimistic in the long run, but I think we have to do some reset in what we are doing, okay? So I'm going to share with you two mega trends. They are well known, but what is really interesting is to understand the consequences and the ripple effect that they have now in the geopolitical landscape, right? But the first one is clearly the separations between the global north and the global south. It is actually accelerating almost on a daily basis. You know, obviously the Israeli and Palestinian war is not a surprise. I mean, everything is extremely well thought out, unfortunately. So you see these tensions evolving very, very quickly. And the second one is the one that I think have been quite well described this morning. It's the tension of the generations. There is a kind of natural, I would say, way of thinking that the next generation has to pay a premium for the green transition. And honestly, try to explain that to a young generation who just start its working experience at 25, 30 years old, 35 years old, seeing all these older people having a fun time, wonderful life, and I'm basically explaining to them that during COVID, they printed significant amount of paper that has generated an interest rate that you know, is going to erode their income to start with. Then after that, you have a little bit of Ukraine and Russians energy consequences that they also have to pay. And you know, you're following all of those different evolutions. You know, those people are just simply asking to make an extra effort to save the planet. Honestly, they don't understand. They really do not understand. To a point that we are going to have probably some forms of clash in the West for sure, but also in the emerging market. You know, we are just experiencing the tip of the icebergs of what we call the migration crisis. It was such a topic at the IMF World Bank 2 weeks ago in Marrakesh that Christine Lagarde said, let's not talk about it. That says a lot. Let's not talk about it is a real bad answer. Yeah? You want to try to actually, you know, address it rather than not. So there is a real need from the global north to take care of the global south if we don't want to experience something that we are not going to be able to control. That's unfortunately, that's a fact of life. Now, I think it was a very interesting question earlier, because this is exactly what I feel about ESG or the green transition. It has made a significant amount of consulting people extremely wealthy. So the first thing that we have managed is to make all those consultant people extremely wealthy. Have we actually moved the needle? It's a real question. So that's something that I think it's not so much greenwashing, but I would rather call it data washing, unfortunately. And of course, we need data to monitor and to do the right things, and technology is there, and they can capture all those different things. So I think they are relevant, but not to a point where it becomes a primary market objective, as opposed as simple energy transition. So we are working right now in green hydrogen transitions and things that helping South countries to be sustainable. Don't sell them a fish, teach them how to fish, so that they can actually develop and harmonize human life for their population. Otherwise, they will flee to Europe, and that is unpredictable. So this uncertainty, and I know we were talking earlier also in the previous panel about customer duty, and people needs to be conscious. There is, again, the managing director of the World Bank said it very clearly. Every 2 years, there are an unprecedented event that we don't control. And we keep on saying it was the last one. That was COVID. After it was Ukraine. Now it's Israeli and Palestine. And there will be another one in 2 years. So the problem is that it's very, very difficult to plan and to make sure that you have all your, let's say, traditional criteria under control to predict the future. I would say, I would stop there just to set the scene a little bit on this panel, and to answer that question. I'm not saying, again, I'm very, very positive, but I just want to make sure we also recognize the challenge ahead of us.
Now, that's a great answer. You covered lots of ground. Before we go to Eila, because we all want to be glass half full. What's the basis for your positivity then? Because I didn't hear a lot of it in there.
Well, no, I think that I think the technology, the energy transition technology is there. All right. So we need to have the conscience to work together to build the financial backbone. I've been in Europe here for 20 years, right? So financial backbone already, unfortunately today, is a closed loop within the West type of ecosystem. So we need to actually design a proper global financial ecosystem for the South, so that long-term investors can invest in this type of transition in a controlled manner. And that is where the hope to create these sustainable economies in the South will come out. So it's very important that we consciously understand that to protect the West, we need to actually help the South becoming autonomous and self-sufficient.
Brilliant, thank you. Eila, I'm going to come to you next, and I'm just interested in what you would highlight. I mean, from an EIB perspective, and I know you have a lot of experience in fixed income and capital markets. So, where would you highlight in our subject?
Well, can I say first of all something to the previous comment, because I very much share the mega trends, North versus South, and also the generational thing. I see a little bit more sort of glass being half full though, because the North South is going to be with us for a long time. It wasn't born yesterday. I think it's just getting more sort of situation is getting more serious. But the generational thing, I'm pretty sort of hopeful on, because and yes, you said that the younger generation now needs to pay for the transition, but I don't know. 30 years ago, there was a collapse of communism, which the then generation paid for, and that was a huge bill as well, economically, socially, environmentally, in all possible respects. There have always been these bills to pay, and will unfortunately continue to be. But the younger generation, I think, is now so much more intelligent in terms of, for example, energy. Everybody who says that we should just continue look for other places where we can buy oil and gas, because Russia doesn't is not the source anymore. And all the people, or almost all of them, they are my generation and older. Anybody younger understands what we need to do with energy. So I'm hopeful that the younger people are a bit smarter than my generation and those even older than I am. So I definitely think that it's not only paying for something, you are investing, and then you are also getting the fruits of that. I mean, we get a freer, cheaper, more local energy. We get cleaner energy, and we save money by not wasting energy. We save money by using less, packaging, less plastics, less water, less anything. So I think this consciousness is very, very clear in the younger generation. Now to the EIB after this this first comment. So what we are doing, I think one of the clearest thing that we have done is 4 years ago, we said that we quit financing fossil fuel projects. That's it. We are not quitting coal in 2035. We are not quitting something else in 2040 or by 2050. We quit it already. Gas, gas and coal and oil, we quit all of that already a couple of years ago. So I think that was a very, very clear sign. And because our thinking is that the public money needs to support the new technologies where perhaps private money is a bit shyer to go to. So 30 years ago, that was offshore wind. Now it's maybe floating wind or battery technology. And also, when you talk about public sector investing in something, then you almost unavoidably hear the comment, yeah, but public sector should not be public sector should not be picking losers and winners. I disagree a slight angle there. I think public sector should not be picking the sure losers. And then if we gain some, we lose some, that is fine. That's the same in all investments, private or public money. And that sure losers to me, it's for example, fossil fuels. So I think that's something that we try to do in what we finance, but also when it's something which is not directly energy, we look at, for example, if we are asked to finance an investment, we look at that when we look at the financial viability in the light of what if we get the real carbon price and the carbon price goes up to 800 euros per unit by 2050, which is 10 times the market price right now. And that is one element in our sort of decision making. So you have to take into account the externalities, even though they are not there right now. We are not pricing in biodiversity loss. We are not pricing in carbon emissions. But what stops us finance providers taking that into account in your calculations and say that, look, I don't know what will happen over the next 10 years, but if these externalities will start to be paid, your investment doesn't look very good. So go back to the drawing board, do it better, and then let's talk again. As you can see, what we are doing, we are putting massive amounts of money into all kinds of things that should walk this talk. Is that now for starters, and can continue on the other topics?
Yeah, no, it's really interesting. I'm just interested in a little bit more on, you mentioned finance providers and you mentioned the EIB's approach. What's your view? You think other finance providers are not pricing in risk properly, or maybe just don't have the same values at their core? How would you characterize it?
Well, either or both, because I still see that in spite of the growth of green finance, and which every financial institution is happy to flag that we do this much, but you also see that there's plenty of money flowing into the, for example, fossil fuel industries.
Exactly.
And one day you will have to get rid of that if you just want to divest. That means that the cost of capital will go up quite a lot for those industries. It already did, by the way, before COVID and before this war, which has now turned things around a little bit. So no, I think there's a little bit of double standards there. And if you remember a year ago when we had the COP in Egypt, there was the United Nations expert group who had put down some thoughts about private sector entities' net zero targets. And their first do's and don'ts was, well, if you want to be net zero by 2050, stop financing fossil fuels today. Stop using offsets in your calculations. Stop lobbying against this development. So I think if we already get these three things done, we have advanced quite a lot.
Brilliant. Thank you. Thank you. Excellent. Morten, I mean, I guess you're here representing investors. I'm hoping you have lots of responsible asset owners that you work for, and the theme of today. As an investor, how do you see the subjects we're talking about? And we've so far heard quite a lot about roadblocks towards where we want to get to, but how do you see things?
I mean, I suppose to one thing which you touched on earlier is I think we have to talk. It would help us as an investor if the narrative was more honest. You know, we were a little bit more clear about this is going to cost us something. So, but this is how we're going to finance it. Let's talk about how we do this, because we kind of flip through. There's been a lot of climate change is the opportunity of a lifetime discussion within the asset management industry and elsewhere, and of course it has been for quite a few people, and but that's not really what we're here for. As a pension fund, we're here to make sure we can pay our pensioners the money they need to retire, and we represent them. So we have to make sure that they are aligned with what we are trying to achieve. And so we take it very much from a risk perspective, and of course in that we think about. In that we do that with any investment, but most of the investments most of the traditional investment tools you have is the data is audited. A lot of the data you use is quite high quality. It's very standardized. We know exactly what we're doing, and we have a sense on that. And of course, sometimes the investments go wrong, and sometimes they go well. But you have a very very clear format for that. With climate change, it's different, and some of the ESG-related risks are just different, and the data is unaudited. It's pretty poor, a lot of it. We are, by definition, very analytical and data-driven, but often too much so, and therefore you're kind of caught a little bit in that. So this is a risk that needs to be managed in a different way. It needs to be thought about in a different way. And I think again, there's that kind of a little bit of honesty in as the previous speaker said, is, you know, we don't know the answers here. The route to net zero will never be linear. It'll be very bumpy and very back and forth. And we have to try things. We have to test things. We have to rely on doing things that we think actually matters. And in our case, we have to. We can't do things because we morally think it's the right thing to do, but we can do things because we think if we take the immoral route, it will have a lot of risk that we don't want. And that risk we want to mitigate in one way or another. So for us, it's a lot about that. It's quite interesting in a way. We have 275,000 members we administer pensions for. And for the last 4 years, we've been asking them about, do they put finance before anything? And about just below 50% say that finance comes first, which is interesting in itself. The other, we are asking them a number of questions, but one of the other questions we ask is, would you expect us to do everything we can to avoid investments that could be detrimental to the environment? And about 64% or something say that they would expect us to do that. And those numbers have been stable for the last 4 years, which I find quite interesting, because to some of the previous comments earlier today, of course, the cost of living crisis is driving again something that you talked about, the North-South divide. But even in the UK, there's a rich man, poor man divide, which is actually pretty substantial and pretty critical. But as I said, in our member numbers, we haven't seen, in our surveys, we haven't seen that yet. But I'm sure our members are thinking about that.
And it would help if the narrative was more honest. Who needs to be more honest? I mean, I know it might be easy to say all of us. Are you talking about governments or people in finance, people in banks, other asset managers? Who needs to be more honest?
I think it's interesting because I think, as mentioned in an earlier panel, I think the Brexit thing, you learned that Project Fear just doesn't work, I think. So I'm not saying we should go there, but what I am saying is, which is quite a lot of the narrative, is the world's going under, we have to do blah, blah, blah. I think we have to start to have another answer, and I think that is for me, policymakers, as well as the rest of us in the different roles we play, but have a more narrative of the world we are transitioning towards is going to look somewhat like this. The transition will require whatever it will require. We need to figure out how we get there, and we need to be honest about also that we'll get a number of things wrong, and if we end up tying ourselves up to this we already knew a long time ago how we would that we needed to commit to these net zero targets. I think we need to be more honest about this. We live in a shifting world. We'll get some things right. We'll get some things wrong. We have to be dynamic in that. We have to be agile. There will be a price to pay on some of this in the short term. In the long term, it might be a very positive story, but in the short to medium term, 5 to 10 years term, there will be a cost, and that cost has to be paid for in a sensible way. Because if we don't have that dialogue, I just think we're losing everyone.
Essentially, Stephan, I should let you go, even though Paul hasn't spoken yet.
I'm really sorry for that, but no, because you asked this very important question of honesty. No, but I think as I was mentioning, I think it's very important that we take a step back and we reset it a bit, because it's very difficult to understand why you need to buy a premium car on one hand because it's a green electric car, whatever it is, and it's a good intention. Everybody wants it. Everybody wants it. But why a premium? And on the other side, you don't really have an answer of why you don't price and tax carbon. So where the honesty or not honesty comes from, and honestly, I know exactly. I've been in it. I know, and I understand. But that's the problem. That's the problem, is that because we let go of things that we purposely know we let go, and on the other side we try to explain that the world is going under and we need to do this. So it's more complicated than it looks like. But I'm just trying to say that I think we need to recognize, and that's exactly what Eila said. I think humankind is smart enough to do the right thing. So you go to a shop, you don't have to have a bag. You may take a paper bag or no bag. That young generations are smart. That's what they want to do. And if you want to invest in something that is has a very clear offtake, which has a green benefit, clearly a green energy benefit offtake, people will invest in it because it's a very clear linear project. You invest in that, and you are going to have ammonia and create a green steel, and so it's very, very clear. But the problem is that no one wants to take the offtake. So the project is not funded. So I stop there. But again, I think we need to try to go back to real green energy project where the line is very straight, and you don't need an army of analysts and compliance and ESG just to do good. In Europe here, we used to have significant amount of issuers that have issued bonds, and they didn't understand why 20 years ago, when they were issuing a bond to do a windmill and all these energy-driven things, they were paying for a global bond at a given price. Let's make it simple, one basis point. Let's make it simple. Now, with the green hydrogen initiative, to reach the same amount of investor network-based, they have to pay 200% more for the same bond, the same company. And they ask why? Because they have to comply to 25 different taxonomy around the world. Excuse me? These are my same product. I'm doing my same thing. And I have to pay now 20% more, 200% more. Why?
We should ponder that, shall we? Morten, Morten mentioned Brexit. I mean, it touched on my day job. I mean, one of the things we've learned about Brexit, which does touch on this debate, is those of us that were in the UK will know that there was 350 million on a bus for the Brexit side. And what we now learn in the communication profession is the purpose of that was not that the supporters of that side thought it was true, or that the supporters of the other side didn't think it was true. The actual result of using data in that way was to actually diminish the value of data and fact in the whole conversation. And what we now wrestle with in the communication world is it's actually very, very easy to obscure data and fact-based arguments, and that spreads through almost all of the debates that happen. I'm involved in lobbying a lot. It spreads through almost every single debate I'm now involved in, the difficulty of establishing truth. But that's, Paul, you've been so patient. Now, we've already mentioned the North and the South. You can speak on that, on data, on regulation, but I'll give you the floor to take us in any direction you want.
Thanks, Tony. And yeah, maybe I can be a bit more the optimist here then to sort of counter some of the, and coming from the OECD perspective, we want to see a lot more funds going into sustainability, and in particular into developing countries. So we sort of track that. We look at the mobilization numbers. So the concept of blended finance, whereby you put concessional, non-concessional money in a transaction to take some of these risks off the table and allow those investments to happen. It is with an exit strategy, and you're sort of thinking about building markets around these areas. So how much have we mobilized? And I mean, I think with the discussions at around the World Bank and the financial architecture, there is a big push for mobilization. Okay, cost of finance has gone up. We've also got worse hedging risk for developing countries, but the political discussion amongst the likes of the US Treasury and others is let's mobilize and let's push these institutions to help you, private sector, go into these sectors, go into these technologies, and bring you in, whether it's in a sort of equity fund facility or whether it's in a sustainability-linked bond or green social sustainable bond with underlying assets. And that's, I think, the EIB has along with actors like the EU, pushing this in terms of getting more into developing countries. So the OECD is working around that. We have a community of practice on private finance for sustainable development. There is lots of movement on this. We do see some regulatory impediments that are happening. I mean, what are those? Those are basically the cost of capital. If you're in a fund and you've got a blended tranche there, it's not recognized by regulators. The credit rating agencies don't often look at blended finance transactions and both the piece that's sitting in the transaction, but also the AAA rated entity, such as the World Bank, that's there. So there could be a lot more done on the sustainability linked bonds, which I think are moving quite fast ahead of the market. And we have seen greenium in pockets. It's going down a bit than it was previously, but there was previously a benefit to going into some green bonds in certain segments, and the pricing compared to exactly the same bond, same tenor, same conditions, that was a plain vanilla. So Chile is doing 50% of their sovereign bonds in SLBs. That's quite a big statement that's coming out from some of our OECD members about where they want to take this. There is a problem, of course, because of the climate. We've got all these taxonomies and there's too many labels out there, and that confuses the market, and investors just go, oh my God. So we would like to see some sort of rationalization around that. But we also want to take it from quite a sort of clear area to social sectors as well, thinking about green buildings that housing students, and you have a bond that funds that. So those are the kind of things we would love to have pension funds in OECD countries in the North investing in and moving. But there's still a lot to be done. But the financial architecture, the messages out of Washington, out of the US Treasury and from other parts of the development system are very positive. And so when we speak to investors, they're quite happy to look at these transactions.
You said you're a fan of blended finance, and then you said some of the tranches are not recognized by regulators. That sounds solvable.
Yeah, I mean, it is difficult because you're talking about transactions often that may be structured sitting in Munich and Allianz, but then the actual activities in sub-Saharan Africa.
Okay.
So.
Okay.
I mean, after the 2008 financial crisis, there was a lot of sort of like, oh, all your risk weightings were, if you had any exposure to developing countries was, but if you've got that blended, so you've got sort of the EIB, or if you've got British International Investment, the UK DFI sitting there, then there should be some way to recognize that. And there should be recognition by credit rating agencies if I've got a guarantee that's provided by the EIB, or the World Bank, or IFC, or there's a AAA entity behind that, and thereby kind of recognize that in the risk weighting and the rating that they give to that structure project. That's not happening at the moment. So that guarantee will often be very concessional. So the pricing won't be at the market rate, but that doesn't translate often into the price that you pay for your credit.
No, thank you. Now, I've got loads of questions. I love this panel, and thank you to Adrienne, who obviously put together the whole day, but thanks for putting together this panel. We've raised so many issues. Now, someone has already caught my eye. I think, lady there, you wanted to ask a question, didn't you? Was that right? We have a microphone, I think, if we do. And I'm happy to carry on with other questions. So take the first question, but if people then want to raise hands, the gentleman there. But yeah, perfect.
Hi, thanks. It's Olivia. Just a quick question for Morten. You talk about the move, you know, some of the pitfalls of using over-obsession around data. If you're thinking about sort of ITR or CVAR and your managers using that, and maybe a shift towards more narrative-based approaches and trying to take advantage of sort of be more honest about the challenges of the low carbon transition. How will you get, if you want both quantitative and qualitative, what kind of best practice have you seen to ensure that they're comparable, those sorts of disclosures? And what do you think is a kind of good scenario analysis?
It's a good question. I mean, I suppose I think for me, I think it's a really big challenge because we are so data driven, and we need to be data driven, and we need to be able to prove our arguments, etc. But I just think there are quite a few areas where you extrapolate data that's going to be very unknown in just look at this summer. The climate change impacts have been more than we expected. There's been quite a lot of higher temperatures than anyone expected, I think, globally. So you have this. This is not. We have all our predictive models, but we are beyond that on climate change, and therefore I think we need to think about it slightly differently. And I suppose that's where I don't have the right answer to you, but I think, of course, I'm a strong believer in scenario analysis because it gives you a way to test your vulnerabilities and test your opportunity set. But I think we have to probably experiment a little bit more with our thinking and use that to drive some decisions. And if I could take a very, perhaps in a funny sort of way, easy one, if I look at diversity on boards, I've seen so much analysis. I don't believe in much of it, but I do believe in diversity of boards. And and why do I have to spend half my life deciding whether I can trust the analysis and the proof point? Why can't I just say it's so obviously logical? So let's start to focus a bit on that. And I think there's a little bit more of that kind of thinking. I think we need across the board, where we end up using, I think, also data as an excuse, because we can't if we can't prove this, we can't make the decision. Hang on, is that really right? And therefore, I just think we need to think a little bit differently about it. And perhaps we can learn from industries that are earlier stage than some of us in the way they think about opportunity sets and approach them. But I think it's difficult.
Yeah, thank you. And the question was for you, but on complexity of data, fortunately, I don't have to pretend to understand the complexities of the question. Eila, or did you have anything to add on the question or on data, or shall we move to the next question?
Just that, yes, data will be key for everybody. And I think one of the sort of questions when we were preparing this panel is that should you get kind of the data standardization or regulation doing the job? But I think also there is it's not one or the other, because I think regulation, as cumbersome as it is, it also pushes standardization of data, because if we only rely on narratives, which is probably necessary also alongside the data, but then you just don't get comparable information. You don't get comparable data, which you can treat and handle and analyze easily. So I think we need both, but we also need the regulation which says that this is what we want you to report, perfect or not, properly not perfect, but it pushes the standardization of data, and then we can get a better understanding. I would like to have a comment about this being honest, if I can I?
Yes.
Yeah, I think we have so many people who are talking about the cost of the green transition, but I think from my point of view, it's the supporters of the brown industry who should be honest. If you make a 10-year contract with autocratic regimes about providing you gas, the question you should be asking yourself, not about the transition necessarily, but do I want to get myself into a position where I can't criticize these countries anything for anymore, what they do, who they support, their human rights, whatever. Does this come with the strings attached? Does this come with a pound of flesh requirement at some stage or not? Let's be honest about that side as well.
That's a good point. I think the dash for gas from the 1990s will be in history books. I have a question on the third row here, and then a question further back. So, gentlemen on the third row, if you have the microphone here.
Thank you.
And then one. Yeah.
Greg Watson from Partnership Capital. We've been talking about megatrends. Is a divide between large and small companies another megatrend? And if so, do small companies need more attention and support?
What's called small companies? Stephan, you want to go, I think.
Well, I think that there is, they're talking about, positivisms and positive thinking. Clearly, as I said, the people are smart and they want to face reality. The climate is deteriorating fast. People can sense that things goes wrong. We were in Marrakesh. We almost canceled Marrakesh. 3 weeks ago or a month ago, there was this earthquake and nobody could see it coming. Just imagine if you had laid down your entire green hydrogen plan and that would have been washed away. I think the technology and innovation and smart thinking are coming from those young companies. And sometimes they are made by quite senior people, by the way. So yeah, because we need a transition, it's often this type of net of activity that creates that quality transition, rather than the big tankers who potentially sometimes have this conflict of interest in dealing with different parameters that they have challenged to walk away, even though they want to walk away. At the end of the day, we can see it is very, very complicated. And even if they try to walk away, there is somebody else on the other side that takes advantage of it. So I think from a competitive perspective, the big backbones have more of a challenge than the young entrepreneurs. I would not call it a cleavage. I will not say it's one against the other here. I would rather say to all of us, how do we accompany that transition with new way of thinking and common sense. I would not so much talk about honesty and dishonesty, but I would talk about simple common sense. There are things that are very simple, common sense. What I don't really understand is why we ask people to pay premium when there is no real big need for that. But I'd like to talk to take on Paul's point, because I want to, and also in Eila, because I want to talk about collateral upgrade and see how we can generate higher liquidity, because it's one thing to move capital to a specific part, but investors want not to be the only one, because if something goes wrong, they want to be. So liquidity is very, very important. And that's what is missing on top of and beyond what Paul said. So really interested to try to carry on the conversation after.
Yeah, that's really, and we'd love to do that. And staying with the small companies, Paul, do you have some to say on the small companies in the last question?
They're a big part, and I mean, you're absolutely right. There's lots of innovation, and 30 million youngsters coming onto the job market in Africa every year. Sub-Saharan Africa is mainly a sort of SME. So they will be the future of some of the big companies. And we're seeing a lot of activity, for example, where it was held in Morocco. A lot of sustainable renewable energy is now used by Spain and Portugal from Morocco. So, I'm not saying they're all small SMEs, but there's these there's lots of things happening in the developing world, and I think that should be recognized. Again, it's data and sort of thinking a bit about that. The problem for us is aggregating lots of those small companies to be able to create a bond that interests institutional investors. But that's another problem. Again, a bit too liquid.
Morten, should I go to the next question, or do you have anything to add on this question?
Just two reflections. I think making it easier. I think a lot of change comes from small companies. A lot of innovative thinking comes from small companies, and of course, making it easier to be a small company and succeed is definitely worth it. And then I must admit, on a personal level, worry a little bit about how on AI, for example, how all these small companies get gobbled up by the bigger ones who have, or the mastodons who have all the power in the world, and that kind of takes away quite a lot of benefits we would have in having a more diverse landscape.
Yeah, thank you. And I have a question. There has to be fun questions. I'll take two questions together now. So, gentleman there has the microphone. Then, if you don't mind passing the microphone over, I'll take two together. Thank you.
Nigel Kershaw, chair of the Big Issue Group and co-founder of the Big Exchange. Quick two observations. Financial sector, it's so polite and nice. In any other industry, greenwashing, taking people's money under false pretenses, it's not washing, it's fraud, it's passing off, it's counterfeiting. Anyway, so I think we need to call that out. Second of all, I'm just taking sustainability as a bigger, what Ipsos Mori was talking about, sustainability is actually about companies and about people. So I agree with you about the data. So my question is about data. We're working with a global polling research company and a tech company who are co-creating brands, anything from NHS to Samsung, Nike, and applying that to impact. I think, and the question to you is, I think we should start to be asking the people we claim to sustain and the people we claim to impact, have you been impacted? Have you been sustained in the way that people are claiming? Because right now, the data, as we say, we haven't got enough data, or we use the wrong data, or we make excuses because there is no data. Let's start by asking people as well, have they been impacted? Have they been sustained, and how? Because that really is the confirmation and verification of the claims that a lot of people are making about top-down data.
Thank you, Nigel. And then we'll take the question from the gentleman over there.
Yeah, it was just...
Can you grab the microphone? Is that, if we just get it on there? Thanks. Yeah, brilliant. Thanks, everyone.
Thank you. A lot of the talk around ESG and sustainable investing is focused on carbon and energy transition because it's measurable. But clearly, with all of that focus, it overlooks the fact that, 90% of the world's solar panels have suspicions of forced labor in the supply chain. EV batteries rely on lithium that comes from conflict zones and can be extremely pollutive in their communities. How do we try as an industry to find a way to balance the E, which is plenty of data and can be measurable, with the S, which is much harder to address, measure, but potentially in the short term can be very damaging to local communities in various parts of the world?
Okay, two great questions, and we can see we don't have a lot of time, so we need to be quite quick in our answers. Eila, do you want to go first? And I'll give you a choice on which of those you want to talk about, asking the people about sustainable impact or the E, balancing the E and the S.
I think rather the second, if that's okay. Because I think people have been mentioning in this panel also unavoidably the word taxonomies, and although the EU taxonomy, it's a very big system and certainly not perfect, but I think it's exactly trying to put these things on the table, because I've heard during my 10-15 years of sustainable finance these questions, but if you have solar panels which are fabricated by forced labor, is that then sustainable or green? And common sense tells you no, that's not good enough yet. But you missed kind of a frameworks or rules, and that is something that the taxonomy or the EU taxonomy is now really trying to address. That it's not enough to be green here, you also need to sort of respect the whole chain of events and the whole chain of supply. So it doesn't make things easier, but it puts the bar a bit higher, and it asks for the transparency in the first instance. Can you show where this was fabricated? Was there forced labor used? Yes or no? How have you checked? So this is like, I think in project finance, one does the due diligence, checks the box, have we checked this, have we checked that? So that is something that needed to be put on the table and somehow in the rule framework, and that is now what is being addressed. It's the work has just begun, I agree, but at least we have it now on the table.
Thank you. And Morten, you're going to address, should we ask people more? And because I know you have involved in asking your investors, your recipients, so should we ask people more?
I think, I mean, I think it's always good to engage people, but I think, of course, it's partly being. But I think if you ask people, you also have to come back to them with the answers that the conclusions you're getting from it. Yeah. You can't just gather information and not play it back somehow. And of course, if you, which also means you have to be quite careful of what you're asking and how you're asking. But I do quite like that. If we just say one point on the E and the S, I think for me the E has been very climate focused, and now we're starting to look at impairment of natural resources and that side of it, which is just 100 times more complicated again, and the data is even worse there. And then to your point, because I totally agree with that, you get into the social side of it, where again the data is pretty poor, and some of it is quite hard to navigate, which means that we have to navigate something where also we have companies that will be really good on the E and really bad on the S, or vice versa, and so that there's a lot of balancing to be done.
And not to mention the G as well. Paul, one of those questions.
Yeah, I mean, excellent question. I mean, just quickly, first off, impact, critically important. We talk too much about mobilization of the money, and to get that, you need, I mean, for parliamentarians, ministers, for taxpayers, you've got, if you're using public money, you need to have, and that also goes a bit to the E to the S. I mean, if there is a blending instrument, whether it's an equity guarantee or insurance, that there needs to be some sort of evidence base for that. There are funds that you can have where they're combining the E and the S and sort of helping investors move to those social elements, but it's challenging, I think, at the moment, and there's a lack of appreciation. There's not enough data again to track that, but I think it's critically important, particularly in the developing country context, where we see more social needs and are much bigger. But you know, at the OECD, we sort of look at impact data where we're doing metrics and reporting on that and pushing the investment community through donor, and particularly if you're using official development assistance, which is the most sort of scrutinized, publicly available data, internationally comparable. If you're going to use that, and you're going to have that in a fund that's going to be dealing with social elements, it's got to be having a lot of impact reporting and transparency around that.
Thank you. Now, Stephan, I'm going to come to you a second, but then we're going to have a big finish after that, because to send these people off to lunch. So, Stephan, you go first. Then I'm going to ask each of the panel for something that you'd like to see in 2024, very succinctly. So, Stephan, one of those questions first, and then we'll ask the panel for something they'd like to see in 2024.
So I would be very brief on that question, because I want to pride what Eila just said. I think that there is a consciousness, at least from the South leaders, that if they are not able to demonstrate that they are doing good on the S and on the G in some respect, money will not come. So I think it's not perfect. I mean, I can clearly tell you it's not perfect, but they have now the understanding that building the next 2 decades will have to be done in a much more transparent manner. And that's why we are trying to build with them these platforms so that we embed these type of indicators in it. But obviously not everybody plays with the same rules of the game. So, you know, it's not because you have something that is perfect that everyone has the ability to afford, let's say, go that route. But nonetheless, the direction of travel is very good. So it's a very positive note.
Well,
and I want to pride, all the people who have contributed to this change of mind.
So we each have 20 seconds for people to talk about over lunch, the big finish, something we'd like to see in 2024. Morten, do you want to go first?
So much I'd like to see, but I think one thing is consistency in policy, and something that is a long-term policy that has continuation and consistency. I'd really like to see that.
Brilliant, thank you. Eila, something you'd like to see in 2024?
Well, just because we have now been setting a lot of a big wish list and lots of rules, but especially in the north-south axis, we also need to offer a lot of assistance, technical assistance, capacity building, making people understand what our rules are and what needs to be done. That is a huge task. It doesn't happen by itself.
Brilliant, thank you. Stephan, something you'd like to see?
I think someone said it earlier in the previous panel. I think that we collectively, we need to try to really think about our loved ones and to try to make sure that whatever we try to achieve has a sense of purpose for them and for the next generation. I think this is the most important part of our job, and complacent and staying in where we are and benefiting from existing wealth. And I understand the point that Elias has made about communisms and all of that, but I think that we are where we are, and we need to design the future together. And I think pragmatism, smart thinking is going to lead us there, and we just have to be honest with our decision-making process. Let's put it this way.
Brilliant, thank you. And last word to you, Paul.
Thanks, Tony. Yeah, I would like to see some breakthrough transactions that really scale mobilization into developing countries, whether that's in the debt capital markets with GSSS bonds, or EGO, Amundi, IFC fund, whatever, but just something that can be really scalable with the private sector coming in.
Brilliant, thank you. Thank you, been a fantastic panel. Thank you, audience, you're obviously a wonderful audience, but if you put your hands together before lunch and thank our panel. Thank you very much.